Welcome back to Switzer. The Telstra share price dropped over 7% today, with TPG forking out $1.2 billion to buy spectrum for a big mobile phone play. So let's work out what's going wrong with Telstra and right for TPG with FNArena's founder, Rudy Philippek van Dijk. Hi, Rudy.
Hi, Peter.
I couldn't have thought of a better person to come in to talk about this Telstra development. Were you surprised that TPG went so hard with the purchase of spectrum?
No, I think TPG made their ambitions quite known in advance. They also moved to Singapore first, if we all know that. But obviously, I mean, we spoke last time about Telstra, and I said last time that if anything, Telstra management doesn't have everything under control. There are things they can't control, and that's, for example, a new competitor entering the mobile space, and that's just what happened now. I mean, last time I also said that people who own Telstra shares should expect to have a return from dividends and not much more. And all of a sudden, that even looks like a big stretch because Telstra shares are now down double digits for the year. And that's not what they pay out in dividends.
Do you expect, and I know a lot of people you know and I know, think Telstra's going to have to cut their dividend sooner than people think? I heard they could cut within 6 months. Have you heard that kind of talk?
No, not really. I think in the case of apparently bad timing, JP Morgan today issued a big report on Telstra with a price target of $5.35 from memory.
Hoo-ha!
And a big upgrade to overweight. And they went through a lot of scenarios, and they basically acknowledged that the share price could come under pressure in the short term because of events like TPG. They were very steadfast in their prediction that Telstra will not cut its dividends, at least until something like 2023 or so.
So, Rudy, what do you think about this target price of, did you say $5.30?
35, yeah.
Yeah. What do you think?
That price target, to be honest, that looks a little bit high. I would be more comfortable in thinking that Telstra will be trading more like a $4.50 or $4.70, something along those lines. $4.23, I think it closed today. That looks very low to me. But sometimes panic kicks in. What also kicks in on a day like today is that fund managers, they often think differently than you and I do, Peter. If TPG is running a capital raising, if you have a certain, as a fund manager, if you have a certain exposure to the telecom industry and you do not want to raise your exposure, which means you're probably going to sell other telecommunication stocks to participate in the capital raising for TPG. So I wouldn't be surprised if fund managers who anticipate they will need the money to participate in the TPG capital raising have been selling Telstra shares and Vocus shares today.
Well, and you know, there are plenty of fund managers out there who, when they lose 10%, they'll sell their stock and maybe wait to see a new bottom before they buy in again. There's nothing wrong with a strategy like that, and that could be the story tomorrow.
I would expect that. I had a quick look before I came in the studio and on the FNArena website, and the prospective dividend yield from here is 7.4%. I would think that to a lot of people, Telstra shares all of a sudden, even with the threats and the dangers and uncertainties that hang in front of the stock, it all of a sudden looks attractive, yes.
But you're the person who's often said to me, it's all very well to buy for dividends, but if your capital is going to be falling in value, that can be like a false economy.
And that's basically what I've said in the past many times, Peter. And you will remember that I was negative on Telstra when it was $5 something. And a lot of people were saying that from the moment it drops below $5, buy it. Now that proved a failed strategy today. I mean, we're closer to $4 than to $5, which obviously for those people who thought they were safely buying a big dividend play that was relatively safe, they're now sitting on paper losses if they don't sell, yes. But I've been saying for a while, if you own Telstra, you should count on the dividend, because I think the dividend thus far looks quite steady and reliable, and they're not going to cut it, but not going to raise it either. And there's a lot of threats and uncertainties operationally, so it's only logical that the market will derate the shares. But having said all that, I do think this looks a little bit excessive for the time being, because I don't think Telstra is anywhere near cutting its dividends.
All right, TPG, do you like this company and do you feel confident about David Tia?
Well, I'll tell you why I have a personal dislike of TPG. I'm a customer of iiNet, and before I was a very happy customer of iiNet, and in the past few months I've actually been contemplating whether I should switch my ISP, because the service has deteriorated remarkably and noticeably. So
under the old CEO Malone, it was a lot better.
Oh, not uncomparable is the word here. Now, while TPG obviously is doing the right thing for investors and to make them excited and to raise their margins, as a customer you do feel the difference and you know where it comes from. It's not from a better service. Now, having said so, the share price has derated a lot since last year, and that's stating the obvious. I'm not necessarily certain that the entrepreneurial approach at TPG now, with big investments, don't underestimate, it's going to cost money to move into Singapore and now to move into mobile in Australia. I think it's not necessarily going to translate into quick gains for shareholders, and it may well create quite some turmoil and some weakness down the track, because this all carries risk. And coming into a mobile space which already is competitive is not going to be easy, and it's not going to be a guaranteed success.
Does this really put the pressure on Andy Penn to come up with a big play? Because I used the comparison on the final count earlier today that this is like a wounded bull, and he's either going to lay down and get completely obliterated, or he's going to get up and do something. But he has to do something fast, doesn't he?
Well, it's going to be defensive. I mean, if anything, I think Telstra a while ago thought they had a little bit of luxury of looking offshore, but I think at this point in time they will dig their heels in and they will go defensive. I know people make comments about Telstra having big market share, big earnings, large margins, etc. But they have thus far been able to relatively defend that quite well. I mean, it's not like the likes of Optus haven't tried to make more than a dent in the Telstra market positioning. So, as I said before, yes, they're on the threat. They're on multiple fronts. They will have to dig in their heels and come up with defensive strategies to protect their client base and to their market share. But it's not that competitors like a TPG get a free lunch here. They will have to fight for it, and success on their part is not guaranteed.
Okay, what about Vocus? Is Vocus a contrarian play, or you just can't see any future for Vocus under the current competitive arrangements?
Well, Vocus chose the wrong time to come under pressure. On pretty much every metric, the share price is undervalued, and that's even more so as it falls pretty much every day now.
Yeah.
But that doesn't mean it can't fall further, and probably in the current constellation, I suspect it might get weaker. We've seen some brokers updating recently, and they weren't really positive about the short-term outlook for Vocus. I think management has to stop the bad news over there, and that hasn't genuinely happened just yet. It may well take them a while, and in the meantime, as an investor, you just have to question whether that's the kind of exposure you want in your portfolio, because you have to have the stomach to see a share price fall every day and still tell yourself that you're on the right track because you're in there for the long run. Yeah.
One last quick one, mate. The Elliott play on BHP. What do you make of that?
Oh, well, a lot of bollocks as far as I'm concerned. It all sounds nice on paper, of course, but I mean, if dissolving the dual listing would be that easy and that profitable, surely BHP would have come up with that themselves. And the whole question about selling off more assets. That's pretty much a question every conglomerate gets on a regular basis. I think if you get Goyder in from Westfarmers, he would have had that question probably every week. It is a fact that a lot of conglomerates ultimately don't survive. There's a lot of conglomerates that over time dissolve because at some point it becomes too difficult to maintain. To be honest, I don't really see a good reason why the 4 pillars at BHP would not work at this point in time. But having said so, obviously it's commodities play, and I guess the difference between a hedge fund that wants to make money right now, right here, and a board like BHP is without any doubt is the short term against the long term, and the board obviously is looking for sustainability and for a longer term run.
Well, one thing I take from this is that probably BHP is well positioned to see its share price probably sneak higher if a company like Elliott wants to get involved.
I'm not so sure about that one, but I mean, obviously Elliott would look over their shoulder and they can complain about the share price that used to be at $49, etc. But as I said, it's not like the board of BHP wasn't engaged in shareholder returns anyway. If anything, the actions like this are probably going to heat up discussions a little bit and might actually put a little bit fire under the belly at BHP to make sure that shareholders are definitely not left in the cold.
Yeah, I totally agree, and that's why I think it's going to be a good thing for shareholders, not a bad one. Rudy, as always, thanks for joining us, mate.
My pleasure, Peter.
Rudy Philippek van Dijk, founder of FNArena. Well, that's the show for tonight. Doing it from Brisbane, of course, but I'll be back in the Sydney studio tomorrow night. I look forward to getting you, keeping company with you and telling you about the latest on Telstra. Thanks for joining us. See you tomorrow night.